Ladies and gentlemen, Greg McCloskey from ForexLive.com. I'm going to take a technical look at the price of crude oil, some key technical levels in play, and I want to bring them to your attention. Let's start by taking a look at the daily chart and more of as a review. If you recall from last week, and really I've been talking about this level for quite some time, the $79 level was a key level on the downside that we had to get to and through if the sellers were going to take more control. If you go back in time and look at these different swing lows and then swing highs through here, and then we moved back up to that level and broke above it here, finding support here before moving to the upside. We came down and retested the level, moved a little bit below here, but then rebounded to the upside. And trading last week, we came down to that 79 level, got within 5 cents of it, I think 3 straight days in a row. Wednesday, Thursday, and Friday, and each of the time the market found support against that 79 level. So that's a key support today and going forward in that in the price of crude oil. Now on the top side, there is another level area that is important, and that area comes right through here between the $82.43 and $83.44. Going back in time, you can outline a number of different swing highs through here. That's really formed a nice, strong ceiling for the price of crude oil in this area, and that level was broken in trading last few weeks, I guess, for 2 trading days right through here, and then the market started a rotation back to the downside, not last week but the week before. The price moved above those levels and then used that level as resistance before moving to the downside. So this area between, I'll highlight it again, between the $82.43 and $83.44 is a key target on the top side. So we know our key support down here at the 79 level. We know our key resistance up here at this area right through here. That gives us a broad framework for the price of crude oil. Now let's drill down to the hourly chart and see what that is telling us. And if we look at that chart here, what do we see in trading here today? The price moved up to a high price of $81.75, and in the process we got close to this 200-hour moving average at $81.82, just 7 cents short of that moving average level, and we found sellers, and now we are back down testing the 100-hour moving average. That's the blue line in this chart. So whereas the daily chart we have key support, key resistance, now we have key resistance up here and key support down here against the 100-hour moving average. If we get below the $80.47 on the hourly chart, that should open up the door for further selling momentum. However, right now we are still holding, trying to hold support. So you could also argue that we're trading in between the goalposts here. The goalpost defined by the 200-hour moving average above, the 100-hour moving average below. We'll see how all that plays out. Let's put a Fibonacci in just to, for giggles, to see what that looks like from our high price here to our low price that we saw in trading last week. And if we do that, the 200-hour moving average comes near the 50% retracement level. That's 50% is always a tough level to get to and through. It's sort of the apex of a seesaw or whatever. We're bullish above or bearish below, and that level is going to also be in play. So we have the 200-hour moving average at $81.82, so 50% retracement at $81.92. I would say that we need to get above both those levels to increase the bullish bias going forward for crude oil. On the downside, we have the 100-hour moving average. There you have it, a technical look at the price of crude oil. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.